Hi guys, Harry Yotis here. I've been a professional trader for 20 years now, started way back in 2005 and still going strong in 2026. So let's get started with a daily market update for today, the last day of the week, Friday, January 9th. And here, this candle right here, we finished at highs. New highs to end the week is very, very strong, okay? So new highs, yeah, but what now? Well, we'll get to that later. First, we'll talk about the technical picture, obviously bullish. We talked about a series of downdrafts, if you will, that are successively less dramatic than the previous one. So here we had a big drop. Afterward, we had a secondary big drop that's less than this one. This drop is less than this one. And now we had this tiny drop that we were talking about yesterday that I suspected we go higher today and going forward, okay? So this, to me, is very bullish. We're still above the 50-day moving average. We don't even have to bring it in anymore. It's so obvious. The technical setup is bullish, and I suspect we go higher. Why? Well, we paired with a sentiment analysis as well. Fear and greed index was around here, 46 yesterday. Now it's neutral, 50. All the sub-indices, well, greed, market momentum, yeah, we're at new highs. Okay, everything else is neutral fear. We still have fear, extreme fear here in the put-call ratio. People are still buying puts as we're going higher. This is beautiful. Okay, so the sentiment is still plenty of room to go into the greed and extreme greed levels and stay there for a while. Okay, we haven't seen these levels in a long time, even as the market is at new highs. So this is a classic wall of worry, okay? So technical analysis, bullish. The sentiment is still bullish. We have a room to run in this game, okay? We did have a big macro print today. We had the non-farm payrolls come in at 50,000. That's pretty weak, okay? We are at, as long as, well, we were expecting 60 and we got 50, so I guess that's good for rate cuts going forward. Who knows? Okay, we don't know what's going to happen going forward. But the point I'm trying to say is that as long as jobs stay between 0 and 100,000 a month, this economy is limping along. Okay, we have a high PE ratio in the market. It's about a 22. So historically speaking, the next 10 years should bring an average annual return of about 0 to 5%. Okay, that's not a lot, but we're going higher. Okay, we've seen other macro prints before, whereas the initial claims were at a paltry 205,000 level, okay, for the week. And I mean, you have the macro not breaking down. We saw the jobs here. You have the technicals not breaking down. We're at highs, and yet everybody's still relatively scared or neutral. We have seen absolutely zero euphoria as this market closes at highs at the end of the first week of 2026. It's incredible. Okay, so that's why I still remain bullish. So we are at new highs. So what now? Well, the thing is, when you're at highs and whenever the market is doing well, you should look at what is working and what isn't working. Okay, so stick with winning trades. This is what I can say as an axiom going forward for the rest of 2026. Okay, stick with what's working, even if it's one or two things that you have in your portfolio. Okay, one or two themes that are working and are long-lasting and will constantly give you a bid and up your P&L going forward is what you want. And you want to stay out of the doldrum sectors. Okay, the ones that are not performing. So what is working and what isn't? Let's start with what's working. Of course, the first thing that is working is precious metals. Okay, gold today finishing near highs. Near highs, okay? Look at this beautiful chart. Why would you go against it? Okay, as you guys know, I am a fundamentally driven trader first, and the fundamentals for gold haven't changed. It is being bought by foreign central banks, and it's going to continue to be bought by foreign central banks. You have a tailwind that's going to last years because, Trump invading Venezuela didn't help. I mean, you think China and BRICS countries are going to stop buying gold after Trump took over the world's largest oil reserves? No, it's going to continue. So you have a fundamental base to be in precious metals, which is gold and, of course, silver. Everybody's freaking out at the volatility highs. Nothing has changed. Still a shortage, still physical demand. Don't get swayed. In fact, you should hope for a pullback before going higher because the fundamentals won't change if you have a small pullback. Okay, so you have that trade that is working. What else? Semiconductors, okay? Everybody's worried about the AI trade. Very bad news coming out. The AI trade is over, the bubble is bursting, etc. Okay. Semiconductors at highs today. This is a leading sector. This is exactly what you should expect to see, what you should expect to see in a rising and bullish market that has just closed at highs. You expect to see the semiconductor index close at highs, and it does. Yet, still negative news, okay? I mean, NVIDIA might not be there. It's above this level, NVIDIA, but I think it continues to go higher going forward. It's like you can pick and choose the stocks within the sector that you want, but the point is that when you have the semiconductor sector going up in a bullish market, you should be bullish. The sentiment here should not be at neutral. We should be at greed for weeks. Okay, we should be at euphoric levels. We're not. Okay, back to the semiconductor. What about the AI? Well, we have here, what is this? This is the AI ETF, the Round Hill Generative AI and Technology ETF. That is still looking good, consolidating. Everything's at neutral now. It's not overbought. Plenty of room to go higher. It might have knocked over this trend and it's consolidating at highs, but it's not falling over. It's still a sequence of higher lows and higher highs, except here. We have to break above this level, okay? Above the 63 on the Round Hill Generative AI and Technology Fund. However, still looking good. There's no breakdown here, okay? What else works when you have bull markets? Well, consumer discretionary funds. The Consumer Discretionary ETF, XLY, look at it. Closing at highs, okay? A scare in April, of course, the tariffs, closing at new highs. Discretionary spending is up. People are spending their money. The economy is not doing great, but it's not doing bad either. It's slowly chugging along as we established. And things that you expect to be high in bull markets are high. Yet again, we're going to go back to neutrality and fear in the AI space. I love to see this. As a bull, you should love to see this. You should be very, very scared as a bull when everybody's on your side and everybody's happy and euphoric at the highs, okay? So now, we covered what works. We have one more industry that is working that people are sort of not looking at. It's the aerospace and defense industry. I love this industry. I mentioned it on my Twitter. You want to be long in defense stocks, look at this, at highs, okay? There are a number of stocks that I love in this index. I'll give you guys a little hint of what I've been playing since 2003. AVAV, Air Environment. Okay, this stock you can see it's volatile, but this is a mid-cap defense drone manufacturer. Okay, one of my favorites. Okay, there are others, but you'll just get this for now. So the defense industry, the fundamentals are like Trump, I know, is supposed to be the quote-unquote the peace president, but no, he loves war. We're opening up a lot of fronts of war. I think he bombed like 6 or 7 countries in his first term. So forget the rhetoric, look at what works. You have defense industry is going to probably be bid by the dips, okay? So you have these sectors that are working based around the Trump theme of the critical metals play, which, precious metals and silver, all that stuff is going to go up. Okay, the global resource war. You have a fundamental backdrop to be in those trades. Okay, you also have a fundamental backdrop to be in the defense industry. You have a fundamental backdrop to be in XLY. Market is closing at highs. People are going to be spending. Okay, but for me, and you also have semiconductors and AI going higher. Okay, all of this is bullish, and yet people are scared. This is beautiful for bulls. Now, what do you not want to be in? Well, the opposite. You like discretionary? Now the consumer staple stocks. Look, consumer staple stocks are pretty much flat for the whole year. This is the beginning of 2025, nothing. You don't want to be in this choppy market. Maybe sell puts, but sell puts or sell calls every time it goes above these levels. If it goes to the lows here of 75, the XLP, you might want to sell a put here, sell a call, because this thing is going to be range bound with a bull market, okay? What else? Real estate. XLE, higher interest rates. Look, real estate flat. You don't want to be in it, okay, at all. And of course, what I really don't like, and I took a trade yesterday, if you guys followed me, is US oil. Look at this bearishness. I think, especially with Venezuela, we should get lower oil. Okay, I entered it a bit too early. I didn't like the way it was going up here because I don't know, maybe he announces. I'm very wary about him announcing a war with Iran. Okay, sable ratting with Iran for various reasons. We're not getting into it here, but I stopped out of half. I didn't even stop out. I voluntarily got out of half of the position that I entered here because I'm not super comfortable with this short. I should have waited until a spike comes. Okay, a spike comes in, maybe around the 65 level. I will short my full allotment. Okay, I'm still holding. I got rid of half, and I'm still holding half short because what I was expecting. The reason I got out of it is I was expecting to see follow through. I was expecting to see getting into it and then having this big level of 65 broken immediately. It didn't happen. Could happen going forward, but I don't like to go with momentum. I like to wait for a pullback, in this case a pull up before shorting. Okay, so we have oil, we have real estate, we have XLP, all the industries that are lagging behind and you do not want to be in, maybe get a short. Okay, so let's recap, guys. That's it. New highs, what now? Okay, this market is at new highs, very bullish. Technical pattern is very bullish. I love this. What would you call it? A lessening of the volatility of the down moves going forward, and then boom, rip the new highs. This is good momentum. We have sentiment neutral. We have non-farm payrolls at 50,000. Jobs are holding up. Okay, so what you want to do is you want to stick in the industries that are working, that have fundamental backdrops in this bull market, and that is the precious metals. Gold, still going to go high. I love this. Okay, silver as well. My two main drivers, my two main profit centers are this, the defense industry, because Trump is the war president, not the peace president, at least for defense industries. Okay, the defense contractors love him, and you should too if you want to make money. We're putting no moral stance behind this. We're just doing with what is working. Okay, semiconductors working. You want to stay high with them, and of course, consumer discretionary is going to be working. Probably in that rank, I would put precious metals, precious metals first, semiconductor second, with AI second, and then the defense industry followed by consumer discretionary in general. What doesn't work? The exact opposite. Consumer staples, flat to nothing. Real estate, flat to nothing. And I hate oil. I love it that it's going down because a falling oil price is good for a bullish market. But I mean, you don't want to be in this sector going forward, in my view. Okay, guys, thank you very much for sticking around. If you like what you heard, of course, subscribe. I really appreciate it. Like, and always leave a comment if you want, and I will get to it as soon as possible. So thank you very much, and have a good day. Looking forward to what next week might bring. Later.